On December 31st, the US bank tapped 74.6 billion from the Fed repo facility, the biggest one-day draw since COVID, and crypto Twitter was immediately lit up with liquidity pivot and stealth EQ's narrative. For 48 hours, that was the story. Then early on January 3rd, the US launched airstrikes on Venezuela and claimed to have captured Nicolas Maduro. Bitcoin didn't wait to debate which matter. It dropped close to $1,000 in under an hour, but the move was immediately rebalanced. Welcome back to Black Room Trade. In this episode, we don't do hopium or price call. We read structure, positioning, and market behavior. Now let's deal with the Fed first because this is where most people got lost. On January 2nd, the narrative of Fed pumped 74 billions and the largest liquidity injection since COVID was all over the place. What actually happens was a lot simpler. Banks accessed 74.6 billion from the standing repo facility. Now understand this. This is a loan and it must be repaid, typically within one day, sometimes up to a week. If you haven't heard this term before, here's a quick breakdown. A repo is basically a short-term cash loan. Now, banks own very safe assets like US treasuries. So when they need cash for a few days, they temporarily hand those assets to the Fed. And in return, they're going to get cash, which will be paid back later and receive the original assets back. Nothing is solid, nothing is printed, and nothing is permanent. Now, the standing repo facility is just the Fed's official place for the banks to do this. This usually happens at year end when banks are closing books and tidying up balance sheet. It is more of a routine, not a crisis. And this is very different from QE, where the Fed buy assets permanently and adds long-term money to the system. QT, on the other hand, is the opposite. The Fed slowly pulls money out. And this really matters because year-end balance sheets always create short-term cash demand. And yes, I understand that QT has paused and T-bill purchases resumed in December. But in regard to the specific repo usage, it was cash management, not stimulus. And most importantly, Bitcoin didn't rally off of this. The reaction was sharp, but it was not sustained. Now, to what the market did react to, the US launched airstrike across northern Venezuela. So this wasn't just talk or policy, it was real military action. The US said it had captured Venezuela's president, the country head of states, and news like that immediately changes how investors think about risk. Now, the market did react fast. Bitcoin was trading nearly 90,000, and within an hour of the report, it dropped below it. Then the move was balanced. This matters not because of the size of the move, but because of what kind of move it was. In a geopolitical shock, a safe haven asset is supposed to absorb fear, but Bitcoin didn't really do that. It sold off alongside risk. That tells you something about the current regime. Right now, Bitcoin is trading closer to a high beta risk assets than to a digital gold. Structurally, the market was already fragile. And yes, Bitcoin ETF did pull in 463.9 million on January 2nd, but let's zoom out a little bit. Bitcoin ETF as a whole lost about 4.57 billion in the prior 2 months. This positioning was not really clean. And now on the mining side, difficulty sits near 148.2 trillion. The hash revenue was down 35%, and new rigs now takes over 1,000 days to break even. So we have to understand that miner pressure doesn't cause crashes, but it does remove support. So here's a cleaner read of the market today. The Fed repo story was real, but it wasn't directional. The Venezuela event was real, and that immediately repriced risk. So Bitcoin told you which one mattered. Now that doesn't invalidate the long-term bull case, and it doesn't kill the ETF demand. And miner capitulation has historically preceded recoveries, but today, Bitcoin is not trading as a geopolitical hedge. Until that changes, narrative optimism is going to matter less than the structure. All right, guys, that's all I have for you guys today. If you have any questions or see something that I missed, leave a comment. If this video helped you better understand the market's reaction today, subscribe and click the like button for the next update. I'll see you guys in the next one.